We want to explore the opportunities and challenges of crowdfunding. I spoke to Jason Best, the co-founder of Crowdfund Capital Advisors, and asked him to explain.
That's the opportunity for people to go out to their friends and family, but also to a wider audience through social media and the web to be able to raise money so that people who want to make investments in businesses that they use or entrepreneurs they believe in.
So let's say I have a business idea. I want to open up a coffee shop, for example. I say, Jason, help me. I want to raise $500,000 to open this coffee shop. What do I do?
You first select the platform you want to use to raise money. You would go to that website and you would then put all of the information in about your offering. How much you're trying to raise, what is the purpose, what will you use the funds for, how much of the business will you be selling to your investors, and then the plans for what you're going to do with that cash. Then you'll want to engage your social network. Crowdfunding is really the first business case for the social web. It's the opportunity for you to go out and say, I now know what the ROI of spending money and time on building a social presence is, because I can then tap that social web presence to raise money for my business.
Can anybody who's watching, can they invest in, let's say you have a business and we want to invest in your business, can anybody invest in your business, or do you have to qualify?
So the rule that was changed by the SEC last week means you have to be a qualified investor, essentially someone who has over $1 million of liquid net worth, or $1 million they can invest in businesses. Now, ultimately where we want to go, and the next big step for the SEC, is to approve full crowdfunding. We expect that we'll issue draft rules in the September-October timeframe, and we're hopeful that hopefully by the beginning of next year that anyone will be able to participate in crowdfund investing.
I hate to go down this route, but whenever you talk about money, there's always going to be the group that quite isn't as honest, I guess, and you're always worried about potential scams or deals that don't go through and go right. And you mentioned regulation earlier. What protections do investors have to make sure that when somebody invests money into a project, that project's going to be fulfilled?
Well, we worked really hard with the House and the Senate and the White House on crafting the legislation so that there were strong investor protections. And certainly the SEC is very, very focused on creating strong investor protections in the regulations that they're writing now. Number one, you've got the due diligence process that happens on the front end that the platforms, the websites that crowdfunding will take place on, will be doing on those companies. Number two, there are the algorithms and the social media that will be used to vet companies. What's been amazing is the tens of thousands of Kickstarter and Indiegogo campaigns that have passed through those websites with virtually no fraud. Because between the algorithms they have and the vetting of the crowd, that's an additional layer of protection. Also, the stats indicate that only about 80% of the money that's invested on crowdfunding to date tends to come from people that are either the entrepreneur knows themselves or is one additional circle away from them. So it's really sort of friends or friends of friends.
Friends of friends.
Doing the majority of that investing.
Speaking of friends, international investors, international project. Let's say you have a project here that you're doing in Washington, D.C., and there are people in Asia, for example, that are interested in investing in it. What are the rules with that?
So with a U.S.-based business can solicit investment from outside of the U.S. Now, however, the reverse is not possible. So from a crowdfunding perspective, you're not able to solicit U.S. citizens for crowdfunding in other countries.